Okay, guys, we are about to talk about how to use Webull and begin investing for beginners. When you come to the stock markets, it will be very confusing. And you will get to a point where you feel like and think that you have figured out how to do it. And when you feel like you figured it out, everything's going to go in the complete opposite direction. There are many things that drag the markets in the next direction. And there are many different platforms you can use to get your stocks. You need to understand what your platform is. You need to understand your goal, understand your role, understand when to get in and get out, and understand overall how to read and navigate. So in this one, we'll be talking about how to begin investing for beginners using the Webull investing app. If you are new here, I make videos on cryptocurrencies, on stocks, on the overall markets every day. Not only just updating what stocks are the next ones to push, but also keeping you up to date on what the full cycle is of what the 52-week lows, what the most actives, and what the top gainers are. Be ready for the next moves. You can be on time. Let's just get right into it with Webull trading platform. Okay, so I personally feel like that Webull is the most easy to use and the most new user friendly app. There are a lot of apps you can use. They be using the Moo They be using the Charles Schwab. They be using Robinhood and stuff like that. Some of those platforms don't allow you the advantages of extended hours. That's pre-market and after hours. And some of those platforms don't allow you the advantages of using your indicators. We'll talk more about the extended hours and the indicators here. You just need to understand that Webull lets you use both of them. And no, I'm not a spokesperson for Webull like that. No, I'm not even finna I don't even put my Webull referral code in the description below. I don't need nobody signing up with my Webull link. Just need you to understand how to navigate and be ready to succeed. Okay. So let's get off by starting off what most people like to look forward to is if the markets are bullish or bearish. When you open up your Webull platform, and it'll look different on the phone, so I'll show you how to use it on a phone here as well, and maybe I'll like split this video up in two for the example off the phone. And so when you're coming to your markets and you open it up, you come in here getting ready to shop, you're looking at what the next thing is. The first thing to understand is if those markets are bullish or bearish. On Webull, it'll show you the United States, it'll show you the Hong Kongs and Chinas, and you can look globally and see what happened around the world. But for us, specifically for me, specifically and personally, I'm looking at our United States section because I'm trading United States stocks. I don't mess with China stocks. I mess with United States stocks. Let's clarify that for those of you who are new to trading don't understand. You are going for the United States stocks, especially you're trading with me. So, in the recent trading days, today is Saturday when I'm making this video, Saturday morning, and good morning, everybody, if you're seeing this right now today. You have more decliners pushing up than advancers. Actually, towards the end of the day, in the after hours, you got more advancers coming in with 3,300 advancers and 2,900 decliners. All right under 3,000 decliners, and they push things down throughout the entire trading day, you see. Big bearishness coming in. This is because if you are new to trading, you don't know this, don't understand this, and nobody's going to point this out to you. The markets are having a rare case right now. The markets are pushing up to highs never before seen. 6,100, no less. Well, 6,099 exactly, but 6,100 no less, and this is creating fear. Why would this create fear? Because when things are overbought, they're getting ready to sell things off. Okay, you follow along with the flow. Understand that the markets, the stocks, the everything, they coming for a rounds of bullishness and a rounds of bearishness. The question is, are you a bull or a bear? And is it your turn yet? But how do you know when it's your turn? Well, you watch your RSI tell you. If it's oversold, it's time for bulls. If it's overbought, it's time for bears. Because if it's oversold, you see bulls buy. And if it's overbought, you see bears sell. You look for the next round of bullish divergence, literally on your MACD. If you see bullish divergence coming in, then it's time for the bulls. If you see bearish divergence coming in, then it's time for the bears. The divergence is truly made once those red bars down there turn into the green bars and your yellow MACD line crosses that blue center line. And it might be different colors on your platform or your app. Keep that in mind. Other as a platforms be a little bit different. I recommend you download Webull now on your phone. Okay? On your phone. But you're going to be faster trading on your phone. We'll get back to that in another lesson, okay? So you got your Dow Jones, you got the S&P 500, you got the NASDAQs. Understand. All the bigger things like the Teslas and whatnot, they be in the S&P 500s. You got a lot of the penny stocks that be in the NASDAQs and the Dows and whatnot, and they come in for more volatility. You can see the Dow coming in for more bearishness as your S&P's been holding up a little bit stronger. Penny stocks and smaller stocks be a little more volatile and shaky. People like to go in for quicker trades rather than long-term investments. Now that you understand what the different indexes are and how to see your homepage, and now that you understand you're watching your United States section, don't be confused about your UKs and your globals, your United States section. Let's continue. You got your market sentiment. It'll tell you if the overall market got the sentiment of bullish or bearish. Here, we currently neutral. Because people nervous, people scared. We want things to be bullish, but we know it's supposed to be bearish. And the markets are trying their hardest to come in for a natural bearish reversal. Natural. Because again, it's either bullish or bearish, and everybody gets their turn. Well, you'll be looking below, and you'll see your top gainers, your top losers, your most actives, your stock monitor, your techs, your 52-week lows. Now I know that you may be a little bit confused when you first get in your Webull platform. You're looking like, what do I look into? How do I know which one of these sections even for me? What's going on here? Well, you see your top gainers will tell you what the biggest stocks exploding are, and or the top gainers for the pre-market. The after hours, your 5 minutes, your 1 days, your 5 days, your 1 month, and your 3 months, even your 52 weeks. We will talk more about what sections you specifically look into and how to navigate those and utilize those to the best of your advantages here in a bit. You got the top losers. I like the top losers. Why? Because a bearishness creates opportunity. Let me elaborate on that for one quick second, okay? When you got the market and everything that's just only going up, there is no opportunity, and it's only fear starting to pick up. You got a lot of people getting the greed and followed up by the greed, followed up by extreme greed, and right now we have the markets in an extreme greed formation on an extremely greedy bull run. Followed up with this would be an extreme fear sentiment and or an extreme bear run. If the markets get hit with a wave of bearishness too strong, or it be some bad Fed news, or war is, or the next war is announced officially, or anything like that, rate cut, tariffs, all of that stuff come in and affect things. So one bad piece of news can make the whole markets drop. I'll tell you a quick tidbit. When markets and cryptos drop, they like to go for gold and stuff like that. We'll get back to that in another lesson. Bring us back to our 52-week lows. Now that you understand that fear and bearishness creates the opportunity, we can dive in deeper to our top losers. You have your pre-market, after hours, 5 minute, 1 minute, 5 day, 1 month, 3 month. But how do you know which one is best for you? Well, me specifically as a swing trader, I'm watching my 4 hour charts. Let's talk about your chart time frames for just 1 second. Off of your 4 hour chart time frame, where a swing traders like to get in. And just this is a quick example. This is just one quick example, a random example, no less. Notice how this thing goes in for the sell-off, right? Like I say, followed by the big bullishness, all green back there, all green, looking super green throughout the days, followed by extreme bullishness or bullishness in general, is followed up by the bearishness. So you will get this thing to sell back off. I can show you this on a bigger chart trading time frame, and you see a little bit more of a clear formation, all the way down to oversold, no less, where it gets oversold and bulls. It's time for the bulls. So the bulls see the bullish divergence coming in. Those solid green bars turn into the solid, those shaded green bars turn into solid green. You still got the yellow MACD line pushing up over the blue signal line. Can be a little bit choppy looking in on honed in time frames, but you got swing traders starting to buy from 83 cents up to $1.50, because when it's oversold, it's bulls time. When it's overbought, it's bears time. You have no business buying a stock overbought. It is your business to buy a stock oversold. Keyword buy. Keyword and key time frame. Swing trade. I'm on a 4 hour chart. My favorite chart trading time frame, and I hone in from a 4 hour chart to a 15-minute chart to see the powerful data in between. But we'll talk more about charting here in the next lesson. First thing to understand, and the key takeaway from this is understanding. You got different time frames for different goals and roles. The monthlies and the weeklies. Looking for that thing to be oversold on the monthly and weekly time frame. Long-term investors. The 4 hours and hours and whatnot, the 15 minutes are for us swing traders. 4 hours for a swing trade, we get an overnight swing, as you can see on GOXG. Same setup, same strategy, every single trade. No business buying in overbought. It's our business to buy in oversold. Where it's oversold, they will buy. We got key statistics and different fundamentals and sentiment that can come in, but I don't want to overwhelm you with too much in this one. We'll talk about those in the next lesson. GLXG, as you can see, the one of the top losers for the last month is still oversold and time to get in. Let's go look at another example. Let's look at the SYRS. Down to a big sell-off, oversold. They're looking to start buying this back up. The QM, Oversold. These are the last month decliners, so they're big discounts. And these are all oversold and ready. Some have different fundamentals and stuff, so make sure you understand what you're looking into. But get into a safe, easy early seat, and you'll be in while it's exploding. If I show you these on your daily chart, it's about that time for all of these. Pick and choose. And if you never know what to pick and choose, just a quick tidbit for all of you who be new to make with Billy, all you who are new to seeing these videos and wherever you are, get this thing a like on YouTube, on TikTok, wherever you at. I could love your support and stuff like that. But you will be able to see when I am putting out, when it's time to buy, when it's time to sell. We already alerted out the next swing trades. I recommend you participate, follow along. To continue on now that you understand these things go to the sell-off and you want to find your top losers for that big discount, find your time frame for it, whether it be a 5 day or maybe you even want to offer 1 day discount. You offer 1 day discount, well, you might be going down to a 15-minute chart from there because it's only a 1 day discount. And if it is, well, boom, you go from 19 cents up to about 70 cents, real easy. More examples, you say? Well, look at this one. MYNA goes from 40 cents, already going up to about 53 cents. Another example you ask? Well, the CERO. And then you see I'm clicking these random. I click them random. It don't even matter. Because when they go oversold, they finna get ready to come in for that bounce. It don't even, literally, I click a random. And I don't go off the 1 day top losers. What I specifically go off of is the 52-week lows. But we'll get to that in just 1 second. Okay. So what they like to do most is they like to look towards they most active stocks. On a most active stocks, they'll be getting a fast, volatile moves. These are big in value. We'll talk about those key statistics in value and whatnot and in another video, getting deep. But one thing to understand now is your volume. It's how many active trades there are. And I like to think of it as how many traders there are. So on our average volume, and what's this? On the SMX, on average, you got about 23 million in volume. Think of it as 23 million active traders, if you will, to make it easier to think of that way. And we currently have 448 million in volume and 448 million in active traders in the last trading day. A free float of 8.5 million. One key takeaway here. Think of this as your free float as a cup size and your volume as the water size. You want your volume and your water to overfill your cup and a free flow. We'll dive deeper into all other stats, but those are the main ones I look to find those quick spikes and or oversold reversals coming in from the bottom. And again, I say the bottom because you look at SMX, our other random example on our most actives here, goes to the big sell-off, right? Back oversold, right? 18 cents up to 76 cents. And once that even sells off, you can see that quick pullback because it's bear's turn, back down to about 30 cents. It starts to make bullish divergence. It goes back up to about 60 cents. You always get around. It's either the bull's turn or it's the bear's turn. It's about to be the bull's turn. Then it's going to be the bear's turn. The next round of bull run might not be as big as the last one. That next round of bear run might not be as big as the last one. Understand. Understand that your most active stocks are high volume. Understand that your most active stocks are highly volatile. These are risky, fast moves. If you are looking for the breakout, which I can show you on the VWAP, which we won't dive into in this one, in another lesson we will, but look for a breakout if you are the day trader. If you are the swing trader, or have more proper market mannerisms just in general, where you're getting it when it's at the bottom. You're going to wait until you see that thing down at the bottom. For example, on LCID will go from about 2.30 or 2.30 cents back down to about $2, where it goes to its most low and oversold position, and they look for the next round of respectful bullish divergence. Again, get in oversold with bullish divergence, get out overbought with bearish divergence. Once again, you have no business buying a stock when that stock is overbought at the top. And in fact, may I show you a bigger time frame? Look at your weeklies. You have no business buying a stock when it's overbought and at the top. It's going to get ready to sell off and it's making bearish divergence. It's your business to buy a stock when it's oversold and getting ready to make bullish divergence. There is no in between. Now that you understand or have a vague understanding of the most active stocks, your top gainers, how those top losers look, now that you have an understanding of what the different indices are, S&Ps with big Teslas and Dows and NASDAQs with little smaller stocks we like to trade on and stuff like that, is one last thing you really need to understand about looking and finding stocks and understanding different sections on Webull. Those 52-week lows and oversold. It's looking similar to how we were looking on our last top losers and whatnot. But I pick our next swing trades off of the 52-week lows and oversold. For example, LICM, once it goes back down to its 52-week low, it had its bear turn. It's bearish run from $2.13 to 19 cents. Bearish go to result. Now it's time for the bulls. They would go from 19 cents back up to about 80 cents, right under a dollar. Catch that wave on your specific chart trading time frame. Now that you understand that the minutes are for you day traders, that the 4 hours and whatnot are for us swing traders, and that the weeklies and monthlies are for us long-term investors, I can show you now your 52-week lows on our swing trade time frame. Our swing trade, okay? And you'll be able to see that these are at their lows and over. So, and no, I didn't just set this list. This is just a random list up here. Look, you click on it because I don't set a watch list. My watch list is the 52-week lows. If a new stock comes on the 52-week lows, it's about that time. Look at RIME, for example. They're already loading this up. We are already in there as well. Look at TCS. At the bottom, they buying this up. Look at SCPX. I know you looking like, oh, why he just skipped ABP? Look at ABP. Down at the bottom, they starting to buy this up. I don't say this stuff for nothing. This is how you trade. This is how you move. It's different if you are a longer term investor, okay? I know a long term investor is going to look at this like trades. Oh my God, those traders. Long term investors have no respect for a trader. Traders don't often understand the long term investment. Understand that we all move differently off our own specific chart trading time frames to fulfill our own specific goals and roles. One must understand how a swing trader and how a day trader and how a long term investor will move. If you are the swing trader, you are the middle grounds between day trades and long term investment, so you understand the best of both worlds. Now that you understand the difference between your time frames, the most actives, the market conditions, what Webull look like, understand this. I don't look at these other sections, technicals and whatever this section say right here, the technical indicator and the margins and the ranks and future. I don't even look at those. I'm looking at 52-week lows. We update those weekly. We got a couple swings for those throughout the week. They move to the most actives and they become the top gainers. Let me explain this very fast, very briefly. I'll explain this by going to your 3-month and your 52-week time frames. Understand, these 3 months have exploded thousands, tens of thousands of percents. Okay? When you click on these, we got to go down to a monthly chart. Notice this, that all of these, I'm going to just click through real fast. Notice all of these are at the top for months, up thousands on thousand percents. Where did every single one of these start at? At the bottom, at they lows and oversold. And they will come in for the next round of bullish divergence. Need to see more? I can hone in. Look at your weekly. They go from the lows and oversolds. These are the last 3-month gainers. Watch this. I go to the last 52, the last year gainers. The last gainers that continue to run nonstop throughout the entirety of the time. All started out at they lows and oversolds. These stocks start at the bottom. Where's your business to buy? Not at the top where you have no business buying. Again, to reiterate, if a stock is overbought on your RSI, do not buy. If a stock is oversold on your RSI, you do buy. You shouldn't have to explain that three, 4 times back and forth. It should really be. But I know a lot of people for some reason just don't be getting it. It's not rocket science. Oversold to overbought. Okay, maybe you locked in gains early. Cool, lock it in. Because you're not a long-term investor in there anyways, right? You still learning, so you're a swing trader. You say you're just trying to get your monthly dues and debts. Well, you're doing that in a 3-week span off your swing trades. And again, not a 4-week, a 3-week. We'll talk more about why you only got a couple weeks to meet your monthly goals in the next lesson. This is how you use and navigate Webull. You can see your heat maps down at the bottom. I don't look at the heat maps too much. I don't care about what industry is being the most heated because I'm going off the 52-week lows and they always explode. If you are new to trading, I recommend you study my section. You can scroll back to my section for the last 5, almost 6 years, where all of my trades, all of my alerts, every announcement, everything is all up in there. Every game, even every loss. Nothing to hide. This is what you do. You go to the section. You see when that alert went out. You match that up with your chart. Okay? Go see the alert. SPY calls going to this and that. Go see the alert. Selling SPY calls for this and that. When you see that alert going out saying a buy, when you see that alert going out saying a sell. This is why they have timestamps and dates. So you can go back and look at the time stamps and dates. If you really want to study, you need to get to my section or even one of the other coach sections. See when they put out the alert. See the time and the date. Go to your chart. Open that stock. Match that up with that alert's time and date going out. This is how you study how to follow along and enhance in on your skills. We'll talk more about how to use these different platforms. I'm Billy Banks. I'll see y'all in the next one. Happy trading.